CNBC TV18, celebrating 15 years of leadership.
The reduction in the rates is a positive development.
It's all about the power of leadership.
This rate cut, however small it is, coming as it does now, is absolutely welcome.
Not just a rate cut, but it also signals a shift in the direction and stance of monetary policy going forward.
I'm sure banks will gradually make the rate cuts, benefits go to the consumers as well.
One down and many more could be on the anvil. A tectonic shift in the Reserve Bank's monetary policy stance is our top story tonight. Good evening. Thanks very much for joining us on India Business Hour. And here are the headlines on what has been an action-packed day. The interest rate cycle has turned, and it's a Pongal surprise from Governor Rajan. The RBI eases the repo rate by 25 basis points, the first cut in the last 19 months.
Arun Jaitley waves a thumbs up to Governor Rajan as the finance ministry gets his wish. Jaitley says the move will help kickstart investment cycle and put more money in the hands of consumers.
RBI does its bit, but will banks follow suit? United Bank and Union Bank ease interest rates, but big banks remain non-committal.
Rate cut sparks a bumper rally on the Lal Street. The Sensex gives a 700-point salute, scaling 28,000. That's the biggest single-day rally in over 5.5 years. Banks lead from the front, with the Bank Nifty hitting record highs.
Kalanidhi Maran ends his tumultuous journey with SpiceJet. The airline's former co-founder Ajay Singh makes a comeback to steer the airline through the turbulent times. Maran will transfer ownership, management and control of SpiceJet to Ajay Singh, subject to approvals.
No fireworks from TCS this third quarter. Profits jumped by nearly 3%, margins in line with estimates, but dollar revenue growth and volumes remain muted. Infosys beats TCS in terms of revenue growth after many quarters.
Trade deficit narrows in December despite a contraction in export growth. Imports tumbled to 10-month lows, taking the deficit below $10 billion.
The telecom regulator rejects the 43% higher 3G spectrum price proposed by the telecom department. Sources say the government unlikely to reduce the reserve price. Why the tearing rush to conduct coal auctions, asked the Delhi High Court to the government. This comes as Jindal Steel moves the court against the centre's move to allocate coal blocks only for end use. Well, our top story this evening, the interest rate cycle officially has turned today. After 20 months of raising rates to battle inflation and a run on the rupee, the Reserve Bank today cut interest rates by a quarter percentage point. The coming of the 2 weeks before the scheduled policy smacked of some heavy nudging by North Bloc, but Reserve Bank maintained future cuts will be data dependent. As CNBC TV18 reported, we told you that the Reserve Bank will cut rates ahead of its policy on the 3rd of February, and that's exactly what's happened. Let's take you through the highlights.
Governor Rajan added a dash of sweetness to the festive cheer today. He slashed the repo rate cut by a 25 basis points to 7.75% from 8%, sparking a massive rally in equities and also pushing rupee and bonds higher. RBI attributed the cut 2 weeks before the policy to the November and December consumer inflation, which have come below its trajectory. The central bank said the sharper than expected fall in vegetables and cereals, the deep declines in global commodities and the fall in the household inflation expectation led to the rate cut. Markets, however, interpreted the advancing of the rate cut by 2 weeks to pressure from New Delhi.
The reduction in the rates is a positive development. It will lead to more money in the hands of the consumer, greater spending, It's positive for the Indian economy, and it will certainly help in reviving the investment cycle.
RBI hinted that while its stance has changed for good, the future action will be dependent on continued falls in inflation and the quality of the fiscal deficit. FinMin officials on their part welcomed the cut and spoke good behavior on the fiscal front, as also continued efforts to improve the supply side.
This inflationary process is in fact quite strong in taking hold, because if you recall, a lot of Indian inflation is determined by agricultural inflation, and to the extent that rural wages have been declining, that's both a signal and a cause of disinflation going forward. So I think that's why I think we can expect this strong disinflation going forward, and therefore that will create the room for possibly for more monetary policy easing.
The markets widely saw the advancing of the rate cut as an indication of more dovishness, while the RBI itself admitting that the January 2016 inflation will be below their forecast of 6%, traders are expecting 2 to 3 more rate cuts in 2015. Bonds surged and the 10-year yields ended 8 basis points lower at 7.69%. The rupee rose to its highest level in 2 months before weakening on the Swiss central bank, ending its exchange rate gap versus the euro. In Mumbai with Lata Venkatesh, Manas Vigilani.
And more reactions. Bankers have given Governor Rajan's Pongal gift 2 thumbs up. Everyone agreed. This is the start of a rate cut cycle, but very few promised early or big lending rate cuts. CNBC TV 18's Ritu Singh has that story.
Finally, Governor Rajan has given bankers a reason to smile. A rate cut even before the scheduled policy. He has even hinted that there may be more reductions in the offing. But will that translate into lower EMIs for customers? Bankers seem hesitant.
You cannot be too far ahead of the pack, and therefore, that is a call that I need to take after seeing how others are reacting. We'll see how it works out, and of course it will depend upon what are the margins that we wish to retain.
In due course, we will be cutting the base rate, but as I said, I still stand that it will be, neutral, margin neutral. Proportionate rate cut in the base rate may not happen. That is what I feel.
My sense is definitely we should be able to look at dropping rates, but it's difficult to put a timing to this because we don't get immediate impacted when RBI cuts rates because we don't borrow money under the repo window.
While 2 banks, United Bank of India and Union Bank, have already gone ahead and cut base rates by 25 basis points each, most banks are not in a hurry to bring down their lending rates. India's largest private lender, ICICI Bank, says a reduction may be somewhere on the horizon.
All these moves, including the movement in deposit rates, brings down the cost of funds for the banks. So I'm sure banks will gradually make the rate cuts, benefits go to the consumers as well.
While Rajan has done his bit to spread the cheer, looks like the consumers may still have to wait to see any real reduction in borrowing costs. In Mumbai, Ritu Singh.
So the RBI finally acting, cutting rates by 25 basis points, and that rate cut got the bulls all charged up in trade today. The Sensex giving a 700-point salute after marking its biggest rally that we've seen since May 2009. That's more than 5.5 years ago. Now the Nifty rallied about 200 points. It flirted with the 8,500 mark and closed just shy of that level. It was all about the blue chips today. The mid-caps underperformed marginally. Nevertheless, even the mid-cap index gained about 175 points, so the bulls back and back in style on the back of the rate cut announced by the Reserve Bank. But let's go to the other big headline tonight. Kalanidhi Maran has decided to end his tumultuous journey with SpiceJet. The airline's co-founder Ajay Singh is all set to sit in the driver's seat. SpiceJet's current promoters Kalanidhi Maran and Carl Airways will transfer the ownership, management and control of the company to Ajay Singh, subject to approvals. Maran and Carl together hold 53.5% in the airline, while Singh holds 4.5%. I spoke with Ajay Singh today. He believes the timing to re-enter the airline is right. He also confirmed that he will make an open offer if the market regulator seeks one, but our sources tell us that they will be seeking an exemption. They will move SEBI to seek an exemption from making an open offer. Singh said that more than one investor is involved in the revival plan and said that foreign shareholding could be between 25 to 49% at the end of the transaction. Here's a slice of that exclusive conversation.
Well, I think the timing is pretty good because as you mentioned, the oil prices are at a historic low. Like you were saying just a brief while ago, the rupee seems to be appreciating, which is great for the airline business. There is a very supportive government which we believe will promote growth over the next several years in the Indian economy. And as you know, with growth comes a great deal of aviation traffic. There are some structural problems in this industry which make it a pretty high-cost environment. We are quite confident that this new government will be very supportive of aviation, which is a critical infrastructure industry, and therefore this is a good time to be in this space. As you also know, the number of Indians that are flying today is still a very minuscule 3%. Clearly that number is bound to grow. So if you can get the cost down and get back to a model where costs are low and efficiency is high, it's a good time to be in the space.
As part of the plan that you have submitted, and I know negotiations and talks between you and the Civil Aviation Ministry have been on for a while now, sir, our understanding is that you have already either moved the market regulator or are likely to move the market regulator seeking an exemption from making an open offer. On what basis are you likely to seek that exemption if you haven't already? Have you heard from the market regulator on the possibility of not having to make an open offer even though there is a change of ownership and control?
At this time, the lawyers are working on those issues. As required by law, SpiceJet has and its board today have made a certain decision which has been intimated to the stock exchange. In terms of the aviation rules, today the competent authority, which in this case is the Ministry of Civil Aviation, has been provided a plan of revival. And it's up to them now first to take a call on approving and passing appropriate orders on that scheme. In terms of
but Mr. Singh, if I can interrupt you, it's not just the civil aviation's nod that you will require, sir. You will require the market regulators go ahead as well under the takeover regulations and the takeover guidelines. When there is a change of ownership and control, an open offer is necessary. Have you already reached out to SEBI? Has there been any conversation? What are your lawyers telling you? On what principle are you going to be seeking an exemption if you haven't sought one already?
Well, I don't want to comment on that at this time. This is an issue which is being looked at by the lawyers, and of course, if we approach any authority and that needs to be disclosed, it will be done.
So you will move SEBI seeking an exemption from making an open offer, even though you will take over management and control from the Marans, sir. That plan is underway. You're speaking with your lawyers. You haven't moved the regulator just yet because that board decision has just been taken, but you intend to seek an exemption from making the open offer.
I don't want to comment on that because this is still the subject of legal discussion and will depend on legal advice. If we need to approach the regulator and if we need to approach SEBI, we will.
You will need to approach the regulator, sir. There's no if and but in that situation. It is a listed company. You will need to approach the regulator. If the regulator says you have to make an open offer, is that a deal breaker?
Well, if the regulator says we have to make an open offer, then we will make an open offer.
Have you had any conversation with the Ministry of Civil Aviation, sir, on the possibility of the government perhaps also supporting your case for not making an open offer? Has the Civil Aviation Ministry had any conversation with you on a possible relaxation of the takeover guidelines as far as SpiceJet is concerned?
Well, we have submitted a scheme for revival, as I said, and, it's for the ministry to pass orders on that scheme. The contents of that scheme are confidential. We will comment on the scheme itself and on the issues that you are raising at an appropriate time. I think at this time, we've just embarked upon the road to try and see if we can find a plan to revive this airline. And, appropriate disclosures will be made and you will be informed as soon as those are made.
Can you tell us how much money you've already infused into SpiceJet?
No, I have not infused, we have not infused any money into SpiceJet. We had no locus to infuse any money into SpiceJet at this time. We were neither shareholders of this company nor were we, lenders to the company. Money was infused into SpiceJet by, SpiceJet partners and vendors. you know, that's where things are. There's no money which has been infused by us directly into this company.
You said by us, sir, so let me ask you this, because again there's a lot of talk and rumors about who you are likely to be partnering with. There's names of private equity players, global private equity players that are doing the runs. Are you going to be backed by a consortium as you try and take this transaction through? Can you give us some sense of where you are getting the money to fund this deal, sir?
Well, as I said to you at the beginning of this interview, you know, the arrangement with the investors is subject to non-disclosure agreements. And therefore, I cannot give you the names. I mean, I know there are lots of names which are...
Don't give us the names. Tell us, is there one private equity player? Is there more than one private equity player? Are there any domestic investors involved?
No, there are more than...
Give us a sense of how many people are involved in this consortium, sir.
There are certainly... there are more than one investors involved in this whole process. You know, there is diligence going on. That process will take a period of time. You know, we hope to complete it as soon as we possibly can.
Is it all foreign players, sir, or are they domestic investors as well? And post this transaction being complete, what will the foreign direct investment or the foreign shareholding be in SpiceJet? Give me a ballpark.
Well, you know, at this time, investors are in touch with the SpiceJet and are looking to invest in SpiceJet. In terms of what the foreign shareholding is going to be, obviously it has to comply with the current FDI regulations. So it cannot exceed 49%.
I know what the cap is, but I'm asking you, how much do you believe the foreign shareholding will be post this transaction?
Well, it depends. It depends on what the final structure is eventually. You know, my expectation is that it will be anywhere between 25 and 49%.
At this point in time, to keep operations up and running, you've already cut down your fleet capacity significantly. Specifically, your Boeing fleet has been cut down by almost half. To keep the operations up and running, what is the immediate infusion that will be required?
Yeah, again, as I said, these are details which we will disclose at an appropriate time. You know, clearly the idea is to put SpiceJet back on its feet. That will happen in a variety of ways. You know, reducing cost, improving revenues and margins, and clearly infusing a significant amount of money into the company to ensure that the past liabilities are paid off.
When you say significant infusion, will that take into consideration the entire liability that currently sits on the SpiceJet books?
Well, again, that depends on what the final plan is. You know, it's not necessary to pay down every single piece of that liability. Some of those liabilities are somewhat longer term in nature. So it's not that, you know, in one fell swoop you'll completely clean the balance sheet. But obviously the amounts of money that SpiceJet owes to various people, including its vendors, you know, a lot of that will get paid. So it will be a significant infusion.
Well, that's Ajay Singh, the potential new owner of SpiceJet, on the issue of whether or not they will need to make an open offer since there is going to be an ownership change. There is a window of exemption that is available that Mr. Singh may be hopeful of using. Menka joins us now with more details on that. Menka, they are likely to seek exemption from SEBI. What are you picking up on what is the likely route?
Okay, so I'm not picking up anything because as of now, as you heard, the management has kept its cards very close to its chest and its lawyers are not speaking either on this deal as of now. But I did go back and look through the variety of exemptions that are available under the takeover code, Shireen, and have a couple of things that I want to share with our viewers as well as those who are invested in SpiceJet. Now, as you've already heard, Ajay Singh has been fairly ambivalent about whether there will be need for an open offer or not. In fact, there is very little information out there on what this structure will be when ownership passes from the Marans to Ajay Singh and how they intend to do that, what the series of transactions would be. The only thing that is evident in their press release or their release to the exchanges, that they have termed this as a scheme of reconstruction and revival for the takeover of ownership, management and control of SpiceJet Limited. And the reason why I'm highlighting this is here, and you will understand this one once I go through all my information. Now, the takeover code does have a certain set of general exemptions. These exemptions are available to all such deals that meet the conditions laid down. These exemptions are available to certain schemes of arrangement, and they're available on the basis of certain conditions that these schemes meet. So certain kinds of schemes of arrangement, subject to certain conditions, can be exempt from having to make an open offer of any sort. And the takeover code says that these exemptions can be availed pursuant to an order of a court or a competent authority under any law or regulation, Indian or foreign. That is, the competent authority has to be a competent authority under any law or regulation, Indian or foreign. Now, so that means the exemption is available in two routes. You're a scheme and you go through the court process, and then you can go to SEBI and say, look, I can or I'm qualified to avail of this exemption, and SEBI has to agree. And you can be a scheme and you don't necessarily need to go through the court rule. You could need only just an order from a competent authority. Now, it's interesting that Ajay Singh, in his conversation with the media, has constantly been referring to a competent authority, which is the Ministry of Civil Aviation. So, Shireen, that throws up a couple of interesting questions here. Are they likely to avail of this specific exemption that is available for certain kinds of schemes subject to certain conditions? And if they are going to avail of this exemption, will they go through the court route, which is that the court will pass an order on the scheme and all the other conditions incumbent to any court-ordered scheme? Or will they just seek the Ministry of Civil Aviation's nod, use that as a nod from a competent authority and go to SEBI and say, look, a competent authority has given us a nod for such kind of a scheme, and therefore this scheme can now qualify for this general exemption? It's very interesting. What they intend to do will become more clear in the days to come, because as yet we have very little detail on the structure. But I did want to point out there is a window of exemption available to SpiceJet and Ajay Singh. Let me put it Ajay Singh because he will be the acquirer, so to speak, available to Ajay Singh, whereby he does not have to spend additional money in an open offer. Right. Now, just as an editorial note and a final note, this is not necessarily fully bad news for shareholders, right? Because if an acquirer of an airline, which is already in considerable trouble, had to spend additional money buying shares from shareholders as opposed to pumping that money into the airline, it would compromise the amount of money he would be able to pump into the airline, because money is not endless or unlimited, so to speak. So maybe shareholders can look at this positively and say this gives Ajay Singh the opportunity to put more money into the airline as opposed to buying shares from us, and therefore if he seeks this kind of open offer exemption, it may not be a bad thing. That's just one way of looking at it. The other way of looking at it is this is a deal that is going to entail a transfer of ownership and control, but there will be no open offer. But this is the window of opportunity.
That's exactly the argument, Menka, that the Civil Aviation Ministry and our sources within the Civil Aviation Ministry are making. And as you pointed out, and Ajay Singh several times during that course of that conversation kept referring to the Civil Aviation Ministry as the competent authority that will require to give the nod and the go-ahead for this deal to go through. And our sources continue to maintain that the Civil Aviation Ministry is on board, and the argument being used is the public good argument.
So Shireen, it's not unusual. It's not unusual for schemes to get an exemption. That has happened in the past. What will be unusual in this case is that this is not a scheme that goes through the court process. If it is only a scheme that is approved by a competent authority, i.e. Ministry of Civil Aviation, and based on that approval, this scheme then avails of the general exemption, that will be the novelty factor in this situation. Right. But of course, all of this is caveated by the fact that we don't know, because the management won't give us any more details as of now.
Absolutely. And we're out of time, unfortunately, Menka. Thanks very much for joining us with your take on that.
Shane, the other question we're asking is that where did it go wrong for the Marans? Was it a wrong decision to get into aviation in the first place? The Sun Group CFO, S.N. Narayanan, believes the decision to invest in SpiceJet was a right one. He also gave a broad picture of SpiceJet's liabilities. Listen in.
After we acquired the company, 3 completed financial years, the company has lost about 1,800 crores. And we've infused about 800 crores after acquiring the controlling interest. This financial year itself, Mr. Maran and Cal Airways have pumped in close to 230 crores. So with that kind of losses which has been piling up, it's inevitable that the number is pretty large. So if you take 1,800, reduce it by the number of equity infusions that we've done, ballpark is about 1,000 crores. We have other businesses. Our radio business is on a fantastic track now, and we have a DTH business which is perhaps the most profitable business in India. So we can't starve those businesses and put money into SpiceJet. I mean, we did. I mean, we didn't want to, make SpiceJet starve. We did what we could, given the situation that we had. And unfortunately, our ability to raise funding from the banking system, I didn't expect it would be so difficult, because I thought a personal guarantee from the promoter would have raised us the kind of money that we were looking for. So that's something, perhaps in my job as Group CFO, I probably should have been a little bit more careful.
So you've heard from both sides, the incoming promoter and the outgoing promoter of SpiceJet. Let's now shift focus to the big earnings. No fireworks from TCS in the third quarter. None were expected. The IT bellwether's dollar revenue growth remained muted at $3,931 million. Rupee revenue was up by 2.9%. Margins and PAT along expected lines. The board has also declared an interim dividend of 5 rupees a share. Here's the Managing Director and CEO of TCS. He's upbeat about the road ahead.
Our demand pipeline is good, deal closures are strong, initial indication from customers on the budgets is pretty strong. We expect significant opportunities in digital transformation, reimagination, then simplification and governance related areas. Volume this quarter is always low because it's seasonally weak quarter. There are two headwinds we always face. Number of working days or less, and also the furloughs. These are the two things that play in the Q3, but otherwise there are no specific issues.
Well, that's the TCS management, and for more, let's go across to Kritika for some key takeaways. Kritika, TCS failing to surprise the street this time around, but that was expected.
Okay, so let's be fair. In the mid-quarter analyst con call, TCS had said that this would be a weakish quarter for the company. It is a weak quarter, yes. They have seen clear seasonal headwinds. But, in terms of the overall commentary, TCS seemed to be bullish even now. So let me quickly go through the numbers. On a margin point of view, the company has seen a growth of around 19 basis points. If you break this up, it's around 20 basis points of additional impact of currency, and a negative 20 basis point impact of SG&A increase. Now, volume really was a key disappointing factor. Volume growth of just 40 basis points. It's a multi-quarter low. Now, when I quizzed the management as far as volumes is concerned, they said that this is only because of seasonal headwinds, furloughs and lesser number of working days, and in Q4 these factors would not remain. But even if you compare it to the last year volume growth was around 1.8%, that is Q3 of FY14. So it is definitely a disappointment and showing headwinds. But if you look at the overall broad-based growth, realizations are up by 230 basis points. Also, pricing seems to be fairly stable. In terms of a sectoral and a geography-wise growth, broad-based growth across verticals, but insurance continues to struggle, energy continues to struggle. When the management was quizzed on the demand outlook going forward, they say that budgets are right now flat. Some clients may marginally increase the budget. So their caution areas remain energy, which is still seeing volatility, insurance, that is the Diligenta business, which has been seeing a lot of pressure, and there's no idea about when we could see a turnaround. Domestic, interestingly, has picked up marginally, but that's always a big question mark as far as the overall growth trajectory goes. So all in all, no fireworks for sure, muted quarter. Q4 will define whether FY15 as a whole has been a decent year or not, or rather if TCS is well placed to capture the demand that they're talking about.
All right, Kritika, thanks very much. That was TCS. Let's stay with earnings. Two-wheeler major Bajaj Auto's third quarter numbers were above street expectations. Net revenue higher by about 10% year-on-year, coming in at 5,657 crore rupees, while EBITDA rose by 8%. The margins coming in at 21.7%, beating street expectations operations of 19.7%, aided by higher export realizations. Exports for the company growing by 17% year-on-year, offsetting the slowdown in the domestic volumes. Net profit fell by 4.8%, but that was also better than expected. Well, that's earnings for you for today. But on that note, it is time for us to wrap up what has been an action-packed day here on India Business Hour. Plenty of headlines, but we'll see you again tomorrow. Till then, from all of us, say goodbye and many thanks for watching.
CNBC TV 18, celebrating 15 years of leadership.